S&P 500 continues to build a flag right under resistance. Nasdaq continues to eat up supply. Apple bears seem to realize that they are shorting into major support. Tesla continues to break out and push through a major key level. We will address the news as to why. We're going to talk about which sectors are actually breaking out, which ones are imploding, and which ones are leading. The reversal in the Russell 2000 is significant. We're going to explain why. Hey everybody, we have a lot of charts to get in, so we're just going to jump into it tonight. Tonight should be pretty chart intensive, but I want to just start with the SPY, and we're going to start there instead of just the S&P 500 because a lot of people are trading options right now. I want to just walk through something with options in a moment here, something you should be aware of while you're trading them, because I do have some people in here and in the community that trade them. So you can see your pattern right here, and you can see your breakout, right? 1, 2. So here's one of those 3-bar patterns setting up to break out. Now, we see this setting up. It's kind of foolish to just assume that we're going to roll over, right? And considering what's going on with the sectors, which we're about to go through, and how we're coming out of defensive sectors and going into growth and cyclical sectors, we're going to address that. But you're setting up a little flag right under resistance. And what does this mean? Why does this happen? This happens because you're eating up supply. It doesn't happen because there's no buyers. It means that there's buyers here, and you have people that have been trapped in here since August that are just waiting to get out. And guess what they're doing? They're getting out. And I think that's pretty significant. Now, I do want to be Captain Obvious here. Here is anchored VWAP at the peak. And if you've been watching this channel for a while, I like anchored VWAP. It has its place. I think if you put it all over the place, it kind of loses its value. The reason I'm putting it here is you can see the peaks, the rallies. At no time since this peak did we ever base and ride that anchored VWAP, break out, come back and retest, and then go higher. At no time in the past 18 months has that happened. And it's happening now, and we need to pay attention to it because it's telling you that things are changing. Now, we talked about these levels in the pre-market live today and how you're just bouncing around right in here, but you can see them pretty clearly even here. And I'm going to use the SPY tonight so that you can just have these levels marked off for your options positions. So if you take a look at what's going on right now, you are flipping levels. In other words, if something is resistance, it's becoming support, and vice versa, right? But more importantly, these levels are being tested. So before, take Friday, June 2nd, well, before we may have cracked this, and then we may have done what? Come down here and gap filled into this, right? We haven't come anywhere close to doing that. Now, can that happen? Of course it can happen. Anything can happen, but it's not happening, and we're not seeing it happen. Matter of fact, we're seeing the exact opposite happen. We're seeing the market broaden and get stronger. So we see this test, flips, test, resistance, resistance. So we know that 428.40 is resistance. So I want to just point something out that's starting to happen. They're starting these breakout patterns on these indexes like here, and then they're faltering right into resistance. Doing the same exact thing to traders here. Now, during these kinds of markets, which I will refer to as a bull market, you usually want to buy the breakouts. The reason it is not working now and it was working for you in 2020, and I can't stress this enough, is you had $1.7 trillion from the Fed backstopping you. You do not have that. You are not going to have that momentum push that is eating up supply any longer. You have actual buyers and sellers, not a backstop. It's very different. So what I noticed today, even trading, was it was getting somewhat frustrating with the lack of oomph. And the bottom line is we just don't have the money we once had 3 years ago. Now, we went through these levels on pre-market live and stated very clearly that right here, this 14,544 was going to be support today. And you can see this, and they're testing us. Now, what they're doing here is they're breaking us down, convincing people that we're going to snap, and then they're just luring them in. These are minor traps all over the place, and you're seeing this, and it happens in bull markets. Now, you do not have a breakaway market here, and that is not a bad thing, and I'm going to show you why in a moment here with a couple trades that we did today. But this is not a bad thing. This is a good thing. When you get proficient at marking off your support levels, which this clearly is a minor support, even though it's only been here a couple days, and you start looking at where your top level is, this allows you to know where you should be getting in and out of positions. But I would watch these levels tomorrow, this 14.6 and this 14,544. It is very clear that they are our levels on the Nasdaq. Now, one of my favorite things about the infantile stages of a move are the setups, because they start to become glaring and you're going to start seeing the same patterns over and over again if you're paying attention to them. For example, if you go through a lot of the movers, you're going to see these stocks and how they drop and they start forming these pendants very clearly as you're forming a pendant right here, right? And then you start kind of going through this and you kind of see something very similar here as a pendant. Now, even if you look at individual names, you'll see bigger formats of pendants right here. So in other words, we're running up. We do not have the money we had 3 years ago. It's why the trading style that worked 3 years ago is not going to work the same way at the same level of proficiency now, right? So you just have to be aware of that. And now you're starting to flip. But if you start being able to identify these patterns, and to be clear, I am a pattern trader. I look for patterns and then I look for breaks in those patterns. Well, this is exactly what you're looking for, because all we've done is just work off the overbought. That's all we've done here. Now, if you look at your hourly chart, and we talked about this for some time and stated that when you're up this high and you're in the 90s on the hourly on the RSI, let's pull that down, then it's going to be really hard for you to keep pushing, right? And we also walked through this and showed how you were on a third standard deviation Bollinger Band. We showed that 2 weeks ago and said, hey, if you're a short-term trader, you probably want to take profits here. And this is actually where we trimmed. So you can go back and watch those videos from 2 weeks ago. It's all time-stamped. But now you see how you're coming straight across here? Look what's happening. They undercut you when? First thing in the morning. Good morning, we're going to undercut. What's that going to do? It's going to get rid of all the weak hands. What's under here? Stops. So you have everybody's sell stops right here, right? So in other words, they buy and then they're going to sell and take their loss right under it. And then what's the market do? Pulls up, tests, comes back down, 1, 2, 3 up. Now, we're not through yet, but there's a couple things here that we should be paying attention to. Number one, we are back over the 50. We came back down and we tested the 50 RSI on the hourly and we flipped. So after everything is said and done, if we look at this, well, you flipped the level and you're heading back over. So this is exactly what you want to see. Now, if you undercut right here, for me, which would actually even be that low, that's not going to be ideal. Doesn't mean that it's over, but it might mean that, as I referred to, the umph might be taken out of the market. So overall, when you look at this and you look at the SOXX, what you should be thinking about is what? Rotation, 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 because that's what's happening to us. Here's a great example of what I'm talking about. So you can see this little trough area right in here, and look at how we trough right on cloud, which are software names, cloud software names, versus when we're peaking right here, right? So you can start seeing that we're starting to peak right here. And what happens during that period of time? Well, we're barely riding the 50 in software. Well, what's happening now? Well, if we start looking at now, well, now we're 50 on the SOXX, right, on the RSI, and look where we are on the cloud. So what's everybody going to do right now? Well, people that don't know any better, they're going to go trade cloud stocks. People that know better are going to go back and start looking at semiconductors, because semiconductors are the ones that are setting up again. Rotation, rotation, rotation. That's what drives a bull market, and you are in a bull market, whether people want to believe it or not. And the reason you have to understand this is you don't have $1.7 trillion behind you. So you need to understand what truly drives a bull market, and it is rotation. Not only rotation through sector, but rotation through index and asset class, which we're going to address. If you look at these peak levels right here on the Nasdaq, and you see where that fits right here with IWN. You know what, let's use IWM. Instead of just using the value names, let's use everything. So here we are, right? And here you are overbought. Are you overbought here? No, you're not. Then here. Then what happens? We work it off. We hardly move, right? So if you take a look from here over, you hardly moved, okay? You hardly went anywhere really since May 30th. How about the Russell? Where have we gone since that May 30th date that I'm talking about, okay? Rotation, rotation, rotation. You're going to see this all year long. So I'm going to use my favorite Gretzky quote. Go where the puck is going, don't go to where it's been. He always used to say, I skate to where the puck is going, not to where the puck has been. So when you start seeing breakouts like this, and you're ready to just jump in there because now's the time and it's definitely going to go, there's certain metrics you should be looking at. For example, one of the things that I like to do, and I did this with the SOXX the other day, and I'll show you, these are third standard deviations, and I can make these way better colors than this. We're just going to make these black, and I think this will help everybody see them a little bit better. And let's just make this really big, and then you can go from there, and let's get rid of that blue and color that so that we get the contrast. Perfect. So you have third standard deviation. These aren't even second standard deviations. And you look and you're pressing right against here. Well, when you're here to here, there is a 99.7% chance you're going to stay in this range. Well, if that's the probability, then when I'm here, the probability that I'm going to be lower is significant. It doesn't always work that way, especially after basing, but it's something you need to take into account that, look, we could just pull back to like 176, 177, set up again, work this off, and then push. That's what you need to be aware of. Now, this is the SOXX trade. We talked about this 2 weeks ago, and as soon as we hit in here on the alpha community, we were in this right around 14. And obviously we did fairly well with it, pops out, and then just sell into it right here. Now, that does not mean that you're not going higher. Some people would sell at 23, which we sold and trimmed some. And then, you go to 24, and people would be like, oh, well, there's an extra $1.50. I'm not that smart. I'm never going to catch the top, and I'm certainly never going to catch the bottom on my buys, right? I just need to follow the methodology that consistently works and pulls money out of the market, right? That's what your goal is as a trader. So here we are, and we're breaking out, trying to break out right here, right? And what happens? And it just can't go. So maybe we're going to pull back. Maybe we're just going to go sideways. But the bottom line is the probability when we were over was that was going to happen. That's exactly what's happening with IWM. Now, when your stocks pull back, there's a statement that I want you to remember. I want you to remember we're working off the overbought. Okay, and that's a statement that a lot of people are not going to get this year, and it is going to frustrate the living heck out of shorts. But you're going to want to remember this because you're going to benefit from that statement greatly. AI names are not going away, period. If you don't get that, I strongly suggest you do some research. I've been talking about this for some time. It is not too late. You're barely in the first inning of this. We haven't even gotten to the frenzy of the new IPOs yet and all the companies that are absolute trash, right? We haven't even gotten to that stage yet. If you've been around, you know how these cycles work. So if you look here, what's happened? We were overbought. Okay, so here's the negative divergence on the overbought, right? So we go higher, right? You can all see this, how we pushed higher the next day. And then what happened down here? We didn't go higher. Okay, so you have that negative divergence, right? All right, so we see that. Now, as we have that negative divergence and we have these little moves right here, what happens next? Well, we form a DTL, downward trend line, right? And we can all see that downward trend line right there, right? And then what do? Well, we have a gap here. Okay, so what happens at that gap? Well, we filled it, came back up through it, right, the next day, came back, retested it, and then kind of bounced around there on the Bank of America Tech Conference, I guess because they didn't raise earnings again in a week, but it doesn't really matter. If you take a look at what's truly happening here, the bottom line is all you did was work off the overbought. That's the only thing that you've done. And they are doing an excellent job of keeping you out of the right names. They're doing a great job. And what they're doing is they're running us up before these earnings, and then they're whacking them. So you can't possibly build a position to stay in it. You have to take the risk, and then they're just ripping them. They did the same thing with Microsoft. And if you go look at any large mega cap, this is what they're doing to us right now. And this is what you need to pay attention to. Because all they're trying to do is shake the tree. All they're trying to do is shake and see what's going on. The people that are going to do the best right now are not going to be day traders. They are not going to be people that are buying options. They're going to have a much tougher time. Option traders are going to have a tough time right now because of the way this market's going to work. You're not going to break out the same way, and you're going to rotate. And if you keep rotating in shorter times, you're going to have to be faster with your option trades, and you're going to have to contra trade. It's the only real way that it's going to work. You're not buying the breakouts and assuming I keep trying it and I'll do okay, but nowhere near to what I thought that I could possibly make. And most of them, frankly, they're not really having any follow through at all. But the pullbacks, well, that's where the money is. Now, speaking of rotation, the question is, well, that's great. How do you know when the rotation's over? I'm going to give you a real quick, easy way. Below on the bottom graph is the CLOUs, the Nasdaq. Up top is NVDA. So yesterday, I saw this and saying, we're starting to buy semiconductors. Semiconductors are getting stronger. And you're going to say, well, how could you say that they're getting stronger? So we're going to mark that 930 right there. And then we're going to mark down here, and we're going to mark that 930. Now, anybody can do this. And what you're going to see is you're going to see the rally, and you can see how the line's following up here. Market rallies. We don't go all the way up. We come down, 230, 240. Once this 220, 230, 240 starts hitting, what starts happening here? We start cracking, right? Just like we start cracking here. What happens around 3 o'clock? We spike, and we spike on the market. Who buys around 3 o'clock? We've gone through this like 1,000 times, right? It's institutions. That's why Sentiment Trader charts the last hour. Okay, so what happens to NVDA? NVIDIA makes a higher high. What happens to the Nasdaq? Okay, so in the last hour, out of the Nasdaq names, were they buying NVIDIA? Yes, they were. This tells you that you have a high degree of relative strength intraday on NVIDIA after massive selling. Now, it doesn't mean you're going to bottom, clearly. Now, today, I am carrying a position in NVIDIA, and I am simply trading around it because it's my belief right now that we're in an environment where position traders are going to benefit the most. Now, if I look coming across here, that's my belief. Now, I could be wrong, but that's what I believe. So I'm trying to build positions going into next earnings. See how you're coming straight across? So as soon as we crack, we know that the conference is today, the Bank of America conference today. We went over this pre-market, and you could just see as soon as it hits, they say the wrong thing. Maybe he wears the wrong color tie. All of a sudden, nobody's buying any AI stocks anymore, and it plummets down. Now, this was a really simple trade for us, just using a couple key metrics. But all we had to do was just wait for this to show a sign of a bottom. If you ever watched any of those candlestick patterns, this is just absolutely glaring. The bottom of this is actually referred to as a bullish homing pigeon. And there was also a couple other metrics that went off that I'm just not going to get into for time's sake right now. And we were able to put this on at like 32.5 with a dollar stop. Got up to 35, trimmed, left the rest on because I'm position building. Now I've made money and I have a free trade on the rest. And if I get stopped out at break even, I get stopped out at break even. Wash, rinse, repeat. Your job as a trader is to establish pattern recognition. Every day, establish it. Find out what's changing, what's different. Does this look familiar? It should look just like SHOP, just like we've seen all those other names. I'll show you another one that broke out today, which was exactly what I said was going to happen. That looked exactly like Meta. Let's go through this. See how you're holding this level? All we're doing is watching it test, failure, test. Flipped that doji right there, and as soon as you flip that, we went long right here. The moment that happened. Now, to be clear, I'm not the only one that knows how to do this, right? So everybody's watching that level, and you test it and you fail, you test it and you fail, you make the higher high and you break. Your stop becomes very easy. It's very, very easy where your stop is. And then you just let the trade play itself out. Now, if you trimmed into it, you trimmed into it. If you held it, you held it. But the people that are going to make money are the people that are going to stay with the theme. And the theme right now is an AI theme. It is not going to go away. You have pullbacks like you just had, but you're going to need to consider adding and building positions or swing trading them. That's up to you. But you want to buy the pullbacks, not the breakouts. And I want to be real clear about this. Okay, about a month ago, you were able to buy AMD down here in the 80s. Now you're at 124. Okay, the chances of you seeing 80 without something happening or some kind of earnings miss are pretty slim. Whereas before, for the past 18 months, well, if you got out of a stock, you could buy it back. Well, what happens when you can't get out of the stocks anymore, get back in at the same price? Well, guess what happens? Supply dries up because people don't want to get out anymore. They just leave them alone and they let them work. That supply, and when that dries up, we'll start moving these stocks even higher, faster. Watch for these kinds of patterns. Now, here's another pattern that's working great. See right in here how you get this like doji. It's just like this lethargic doji at the top of a channel. Like, oh, you don't really have to pay attention to this. This is nothing that you have to pay attention to, right? And then all of a sudden, we're just breaking out and closing above it, but it's a red doji, so you want to avoid that. What happened today? Red doji right here. We talked about this yesterday. We talked about this exact trade yesterday and this level. And then look what happened today. Okay, look at what happened today. There's your doji. What did you do? Same exact thing you did with Meta. These patterns, they're replicating. The reason that they're replicating is people are putting money to work. And these are the ways that they're using to get into these names. They're using weakness to get in. They're shaking the tree because they can. Because why? They don't have $1.7 trillion behind them to backstop them anymore. So they can play more games, which is good if you know what the games are. As long as you understand the rules, you can play the game. Now, if you don't see breadth today and see how the breadth is expanding, I can't help you. You have the XBI completely setting up to push and challenge that DTL. You have the financial. Look at this ugly pendant that had me so concerned. What did we do today? So this, and I think this is really important. Let me clean this up. This ugly bear pendant that I'm worried about. What do I have? I've got an island here, right? Now, that island, which could be a bullish island reversal, which you have right here, I don't have confirmation until I close above that level. And I closed above that level. So I have confirmation that the bottom in financials is in. Okay, that's how I would look at that. Now, that would be medium term to me, right? It doesn't mean that long term we're going to break out and hit highs. I'm going to be clear about that. But it does mean that most likely we're done. And that this made a decision, and here it is. And that's because you had a huge push to the downside followed by buying, right? Here you are and you're breaking out. This is the kind of stuff you want to pay attention to, okay? This is important stuff because you're starting to diversify through the different levels, through your different sectors. Here's XLY. We've been saying retail's dead, retail's dead. Now we're hitting new highs on the year and 7-8 months highs on retail thanks to Amazon. Basic materials, you're flat on. That's not shocking. XLI's up even though Boeing is doing Boeing things. XLC, which is NVDA, Netflix, Meta, Google. This is your leader, okay? This is your leader. This is the one that's hitting higher highs and closing at higher highs every day. This is the sector that's doing it. Okay, if you take a look at the S&P did not close at these higher highs and make these higher highs. XLC did. This is your leader. Getting through the 64 is critical. And you're going to want to watch those three names that I just mentioned. XLK, I don't know how you could be looking at this and being bearish. I don't get it at this point. To me, you're almost near all-time highs. Okay? And I think that's a really important distinction. Apple hit all-time highs yesterday. Okay? And that's a $3 trillion company. That's not people on FinTwit. Right? That's real money coming in the market. What's dropping? Utilities. Why would I want a 5% of Duke Energy when I can go get a 1-month treasury? What else is dropping? XLP rolling over. They're getting out of defensive, they're getting into cyclicals, and they're getting into growth. Have a good night, everyone.